Greg Foss makes a compelling argument for why you should consider investing in Bitcoin. With 35 years of experience as a risk manager, Foss sees Bitcoin as a golden opportunity for investors. He envisions a scenario where Bitcoin becomes a safeguard not just for the United States, but for multiple countries. Foss himself introduced the idea of extending this financial safety net beyond the US to encompass the G7 nations and eventually the G20. Through a financial instrument known as a credit default swaps, this expansion could potentially skyrocket the value of one Bitcoin to over $700,000. Welcome to CoinVantage. I'll be sharing fresh content regularly, so please feel free to like, subscribe, and comment. Your engagement fuels our content creation. And remember, this isn't financial advice. Investing in cryptocurrencies carries risks. It is crucial to consult a seasoned financial advisor before making any investment decisions. In a recent interview with Kitco News, Greg Foss, the executive director at Validus Power Corp and a prominent Bitcoin strategist, delved into various topics, including bank bailouts and currency devaluation. What caught my attention the most was his unique perspective on Bitcoin, likening it to insurance in the form of credit default swaps for sovereign debt. Credit default swaps, as explained by Foss during his conversation with Michael Macquarie, serve as a protective measure against the risk of a counterparty defaulting. In the context of the United States, which carries a substantial debt burden of nearly $200 trillion in funded and unfunded liabilities, the current value of Bitcoin appears undervalued when seen through the lens of credit default swap insurance. What sets Bitcoin apart in this scenario is the complete absence of counterparty risk, a distinct advantage compared to traditional credit default swaps. Greg's viewpoint on Bitcoin intrigued me, particularly because it challenges conventional thinking. It's worth noting that Greg has been advocating this perspective for some time now, and what's different this time is that influential figures in the financial sector, especially those overseeing credit matters, are beginning to align with his viewpoint. In essence, Greg Foss recently discussed Bitcoin's potential as a hedge against the potential collapse of numerous fiat currencies and sovereign debts during an interview. He proposed a method of evaluating this potential by multiplying the open market credit default swap, or the CDS, spread by a nation's outstanding debt. To illustrate, let's consider the United States as an example. If we assume a modest 5-year CDS rate of 40 basis points, it would cost $40,000 annually to insure $10 million in US debt against default. If we extrapolate this to a 20-year CDS equivalent, it amounts to a rate of 160 basis points. Given the US is nearly $200 trillion in liabilities, including funded and unfunded obligations, this approach implies an implied insurance of value of $3.2 trillion for the United States alone. In contrast, the current market value for Bitcoin hovers around $500 billion. Greg Foss emphasizes that if people begin to view Bitcoin as credit default swap insurance for not only the USA, but also other nations, it appears to be undervalued, trading at just 1/7 of its potential worth for the USA. Importantly, unlike traditional insurance, Bitcoin carries zero counterparty risk. While Greg acknowledges the value of both Bitcoin and gold, he contends that Bitcoin's fixed supply, portability, and auditability make it a superior choice. Given the likelihood that the United States will be among the last countries to experience a fiat currency crisis, Greg sees Bitcoin as the ultimate insurance policy against such failures. His first view resonates particularly well with credit-focused individuals, such as himself and Steve Tannenbaum from Golden Tree, who may quickly recognize Bitcoin's potential as insurance. Ultimately, the market value of Bitcoin reflects its multi-faced nature and the diverse perspectives held by various stakeholders. Unlike manipulated fiat currencies, Bitcoin's market operates freely and transparently. In conclusion, Greg Foss implies that not owning Bitcoin might mean missing out on a rare opportunity for asymmetric investment growth, even in the face of skepticism from figures like Taleb and Charlie Munger. Greg Foss's insight into Bitcoin as a unique form of insurance against the potential collapse of fiat currencies and sovereign debt shed light on the cryptocurrency's remarkable potential. With over 3 decades of experience as a risk manager, Foss's perspective underscores the value of Bitcoin in a rapidly evolving financial landscape. As the world witnesses increasing acknowledgement from prominent figures in finance, it becomes evident that Bitcoin's role extends beyond a mere investment. It represents a paradigm shift in financial security. Whether seen as a technology, an insurance product, or a store of wealth, Bitcoin's versatility continues to shape its market value. In a world where traditional systems face constant manipulation, Bitcoin's unmanipulated, transparent, and decentralized nature stands as a testament to its enduring appeal. As investors navigate an ever-changing financial landscape, Greg Foss's insights serve as a compelling reminder that Bitcoin may well be one of the most transformative and valuable assets for our time. If you enjoyed this video, make sure to give us a like and subscribe, and we will catch you on the next one.